Hi guys, welcome to another episode of The Aspiring Entrepreneur. I'm your host, Hamza Chowdhury. It is August 3rd, 2021. In this video today, guys, I wanted to talk to you guys of should I be investing in Chinese stocks? It's something that we've talked about previously on this channel. I did mention sort of the structure of a lot of these Chinese companies, and I wanted to highlight an article that CNN recently came out with that reiterates some of the things that we talked about. Before I do so, guys, I just want to apologize. I know I've been MIA for a while. This past month, I've really been focusing on clearing my mind on some of the things that, I feel like are important in life, like health. I've actually dropped about 10 pounds since my last video, so I've really taken the gym, dieting, and a lot of things lots more serious, just so I can have also a clearer mind when I do trade. I mentioned to you guys in June, I did take my biggest loss of my trading career in Clover Health, and I felt like I was starting to lose the edge that I have in trading, and I really wanted to just take a breather and take a step back. And so although I will be recording videos, maybe not as frequently, I am still here on the channel, and I do apologize for those of you guys who do look forward to these videos. As always, I appreciate your support, and you can always smash that like button for me. And in this video, guys, once again, we've seen a big decline recently on Chinese stocks, Chinese names. And so, one of the stocks I've gotten involved with that came out recently is what we call the Uber of China. It's DIDI. You probably heard of it if you've been trading. And so it came out, it had this, massive volume. Of course, first day of trading is always a big, sort of exciting liquidity event. And you can see that the stock never really reclaimed its top. And it's kind of like Wish. If you look at Wish and some of these other stocks, a lot of stocks start high and then they actually end up trading a lot lower than where they opened up at. And so what happened with DIDI, it quickly lost its ground. And a lot of these sort of gaps that it created in the chart were due to news that were coming out of China. China's cracking down on its own company, right? That it IPO'd. And some of the things that China wants to do is, have this sort of grip, hold on its companies that that operate inside it. And so you can see as this news kept coming out, we went from a sort of a $15-16 stock down here to $7. And so what I've been doing is sort of daily, I've been trading it daily, I've been playing some options, and I've also done, as you guys know, I play long and short on the stock. But what I really wanted to talk about today was, just a combination of Chinese companies. Some of you guys on this channel have asked me about Baidu, you've asked me about Baba, and I've been very open and honest. I've said, yeah, I was a Neo long back at $6 and $7, but I haven't touched a Neo since it was 11. I don't touch Chinese companies for the very reason of this article that I do want to share with you. And so what I have here is a superimposed of some of the biggest Chinese companies on the market. So it's JD, Baba, Baidu, Neo, and we're looking at a daily chart. And so you can clearly see here back in February, when around kind of a few weeks after Joe Biden took office, you can see that the Chinese stocks essentially hit an all-time high here of around 780. And since then, you can see that we've had almost a 50% retracement. It's more like 40%. And so, overall, the trend for Chinese stocks is definitely downward, okay? And this can definitely go a lot lower, okay? This isn't to say that this is the bottom, but the question for this video is, should I invest in Chinese stocks? And so ultimately, that's a decision that you're going to have to make. What I want to do on this channel, in this video specifically, is give you more information to help you understand, one, that you're buying sort of a sector that's in the decline and that necessarily hasn't hit its bottom, but also it's an article that I ran into that I thought was really interesting. And because of DIDI's sort of skeptical of, the issues that it had with all of this news, it's kind of like, well, the SEC is like, hey, we got to step in here, right? This stock that just IPO'd went 50% off in the next few days. Definitely, we need to take a look at our practices to make sure that things aren't sliding through the cracks and people aren't losing a lot of money. And what I really thought was interesting, and you could, talk more about the stock plunged more than 30%, which we just talked about. But really, it's one of the things that I really wanted to focus on, which is this. But Gensler said that he wants these companies to disclose more information explaining that investors are not directly buying shares of a company headquartered in China. And so again, we talked about this on this channel months ago when I explained why I don't invest in Chinese, and I wanted to reiterate this because this article came out and I'm like, guys, this is really the case. When you're buying shares of these companies, you're not buying shares of DIDI. You and I, as non-Chinese citizens, are not allowed to profit off of Chinese companies. Okay, so let me say that again. You and I, as outsiders of non-Chinese citizens, are not allowed to profit off Chinese companies. Okay, and so this will make sense as we sort of go on here, as well as more details about the relationship between the shell company and the parent firm. Okay, and so when we talk about a shell company, That's the company that's on the outside, right? That's the shell. That's not the company with the assets. That's just the company that you're actually buying shares of. It doesn't have the assets. It doesn't have all the sort of income, all the things that we want. It's just contracted, right, to have shares of the firm that it's representing, which is the parent firm. He also is looking for more disclosures about the risk these companies face as a result of regulatory changes made by the Chinese government in the future, and wants the companies to include more detailed information, right? And that's something that we've had after the whole thing with Lunkin Coffee, right? We want to be able to see financials. You and I can't see financials. We don't have the SEC in China. We don't have the regulations we have in China. We have to purely depend on them, on their word. How many companies, even in the United States, have lied, have cheated, have been committed fraud on their books, right? And so the trust factor really goes out, especially if you're a retail investor and you don't have those in connections, you don't read those financial statements, you're not used to reading them. And so what was really interesting was that, basically that regulators need to not only sort of crack down on this, but also the fact that you as an investor, again, you're not actually buying shares of a company in China. You're actually buying shares of the shell company. And so ultimately it's up to you to decide if it's something that you want to invest in, if you want to be sort of an investor in this beatdown sector. But me personally, guys, I will be staying out in the meantime. Okay. So with that said, guys, I hope you have a wonderful day, and I will see you guys on the next video. Take care. Bye-bye.